you're a home buyer, somebody or a young person looking to buy a home, you need a bit of a reset.
There is a possibility on the other side of this that inflation could actually be quite low.
Welcome back to Real Estate Mindset. Today's video is going to be absolutely bonkers. Now, the data is in, and today we're going to go back the auto loan crisis and why everyone is searching for give my car back. And now here's the good thing, you guys, you can actually give your car back. It's called a volunteer repossession, and it will follow you and destroy your credit for probably 5 to 7 years. So the question is, guys, is what's going on exactly in the auto loan department? The subprime collapse. Obviously, we already know we had a bank failure this year with Citizens Bank as a result of subprime, or rather truck loans. So there's a catastrophe brewing right now in the auto loan sector. Now, the interesting thing is that appears to be even more of a meltdown than commercial real estate. So we're going to go over that. I'm also going to go over data that finally shows us that car loans now supersede student loans. So it's the second highest consumer debt now. That's really quite shocking. We'll go over average payments, we'll go over the defaults, we'll go over all of that stuff. And if you guys can, don't forget to like this video, share the video as well, hit notifications, guys. It's really important for the growth of the channel that you engage, that you comment below. And obviously, guys, it's a good way for me to also see what you're going through and for all of us to hear your intel. So I really appreciate all of the support. Please continue to do so. But regardless, you guys, we're going to go into a few articles that's really going to spell out what's happening in the auto loan department. The first article and data we're going to review is from The Street with an article titled "Why People Are Suddenly Desperate to Get Rid of Their Cars." And I'll tell you guys right now, it's probably because the ridiculous payments they have on those cars that are 6 or 7 years. One of the biggest problems with a car when you compare it to a house, well, okay, the housing market is incredibly toxic right now, but in a normal housing market, cars depreciate, and they depreciate significantly. Now, one of the advantages of purchasing vehicles is, in my own situation anyways, and I'm not a CPA, is you can claim the depreciation on your Schedule C on your tax return. Again, I'm not a CPA. Talk to your CPA, but it's a really good way to have additional tax deductions if you're self-employed. Unfortunately, most people are not purchasing cars for that reason, so there's a massive crisis brewing in the car loan department. Two things I want to highlight on the internet. Give Car Back has hit record high levels as far as people searching. So all of America right now is trying to figure out a way to give back their car. Again, probably because it's way overpriced to begin with, and things are only getting much harder for consumers right now. A couple things in this article. In the US, during the first quarter of 2023, the average car payment for new vehicles hit a record high of $725. And comment below if you got a new car. Let us know what your monthly payment is. Again, you guys, please listen. Comment below. I'm anxious to hear to you, whether it's a new car or used car. Just put your payment in the comment section. Now, $725 is an 11.5% increase year over year. Now, for leased vehicles, the average American somehow pays $586 for a leased vehicle. That's also up year over year, a whopping 11.2%. Now, there is a little bit of a break for used cars. Used cars, the average payment is $516. That's only, quote unquote, only a 2.2 year over year increase. And I'm going to say this right now, there is a runaway inflation, not just with shelter, with rents and home prices. There is also runaway inflation in both used cars and new cars. And now we're starting to see that crack as far as prices. Now, obviously, now new cars need to go down more. Used cars are starting to depreciate, or the value starting to go down. That's exactly what we need because, again, runaway inflation, people are absolutely hurting right now financially. The institution also found that auto loan delinquencies hit 7.3% in the second quarter of 2023, which surpasses levels that were seen before the COVID-19 pandemic. Now, as far as the Federal Reserve, one of the Fed's core duties is to keep purchasing power in check, and they can't do that with 0% interest rates. And they do that by rising interest rates. Car loan rates haven't been this pricey since 2008. But not only are the prices absolutely exploding and the unaffordability, look at this guy. Obviously, the economy is in huge turmoil right now for anyone that's not in the top 10%. The mounting economic pressure is starting to take a large bite out of Americans' paycheck. A report from Lending Club shows that 62% of Americans are living paycheck to paycheck. So it's kind of crazy how the psychology of the consumer works. 62% living paycheck to paycheck, and that's in many income brackets. And then if you really want to dig in, it's also amazing that about 60 to 70% of GDP is from consumer spending. And the reason I'm telling you guys this is because we live in a debt-ridden society. Our economy works by people continuously getting in debt. So you're not going to get these car dealerships or really many people that are warning you, hey, don't buy a car. Buying a car right now is one of the worst investments you can make. There are people that are trying to desperately give their car back. Repos are absolutely exploding. The only real reason you should be buying a car right now is if you can make money off of it. Like if you have a business and you need it for some reason, a delivery business, maybe moving business, something where you can make money back on your investment. And you shouldn't be buying cars that are 60, 70, $80,000. That is a lot of money. So again, to recap, new car payments and leased payments are up somehow year over year, a little over 11%, with the new car average payment being $725, a leased car being $586, and a used car at $516. Now, personally, I don't know why people purchase leased cars. To me, that's a huge scam. That's a huge ripoff. Maybe you can comment below if you're leasing a car versus owning a car. Again, to me, it just doesn't make sense, but I'm interested to know how you feel about owning versus leasing. Now, here's the delinquency rate from the New York Fed. This was put out in November, and I want to draw your attention to the green line. The green line represents auto loans, and the delinquency rate right now, 30 days or plus, has been skyrocketing ever since 2021. So the trajectory is shooting up, you guys. We've been elevated like this for about a year. We are well past where we are at average. You can see the average line is kind of right here. And then obviously it spiked during the great financial crisis. You can see that right here. So we're not at the peak where we were at the GFC, but we are definitely higher than we were at pre-pandemic. And again, you guys, the trajectory is shooting straight up. Now, what is very interesting as well is the same thing with credit cards. The credit card delinquency trajectory is even faster than car loans. And again, here's where we're at with the credit cards. That's the blue line. Pretty balanced from 2013 to 2021, so about 9 years of balance. But all of that's changing because the economy right now and unaffordability is completely out of whack. And if you guys want to come back and check out this report, come back here and check out the report. This is 90-day delinquencies. Again, you see credit cards just really spiraling out of control. I mean, credit cards is back to 2010, 2011 levels, with cars slowly getting there. So the question is kind of like, what happened? And I think this is a good article that breaks that down. An auto loan debt crisis looks imminent. And again, we've already seen a bank fail just because of auto loans, not because of the commercial real estate meltdown, not because of foreclosures or unemployment, but because of auto loans. Think about that. What's amazing is auto loan debt has surpassed now student loan debt. That's crazy. In September, the Wall Street Journal reported that auto loan debt had surpassed student loan debt in the total amount. At the end of Q2 of 2023, auto loan debt reached 1.58 trillion compared to 1.47 trillion in student loan debt. And that has not happened, you guys. If you look at this chart right here, this chart goes back to 2013. I mean, you see the gap. The gap was a pretty big gap, but now student loan debt has fallen and auto loan debt has increased. This is not good for lenders that are heavy in subprime auto loans, again, because of the defaults. If consumers cannot pay their bills, banks will go out of business. A lot of people don't realize how much control we as consumers really have. The problem is we're just not united. There are so many people that just don't care about anything we say right now, which is actually really sad because most of those people just stay trapped in what we call the rat race. Auto finance delinquencies are still on the rise. At the same time that total auto loan debt is increasing, so is the number of Americans who are failing to meet their auto loan payments. According to the Federal Reserve, auto loan delinquencies for 60 days or more increased again in September. That's the 5th month in a row, and that's up a whopping 13.3% on the year. So that's pretty crazy, you guys. That's going into Q3. We went over Q2 stats. Delinquencies among specifically subprime borrowers reached a nearly 30-year high in September of 6.1%. That is the highest rate since 1994. Wow, so that's amazing. So delinquencies for subprime is now exceeding the great financial crisis. We have so much turmoil going on right now. It's really hard to fathom how the whole thing hasn't fallen apart already. People are paying more each month towards auto loans. In addition to the rise in the average payment, there has also been a significant increase in car payments that far exceed the average. In July, Experian reported that 3 times as many people were paying more than $1,000 per month. And again, if you are paying $1,000 a month and you're not making money off of your vehicle, that's in my opinion, I'm not a financial advisor, that's so bad. I can't even, I'm about to have a meltdown right now. I mean, I'm sorry for raising my voice, but I got to yell at people like this is not the time we should be buying lavish things. If we wait a bit, let everything collapse, we may be able to get a fantastic deal. But if we're not purchasing with principles, I fear that this is going to get worse. The dramatic surge in annual percentage rates since 2022 has played a substantial role in increasing car payments. Perhaps the biggest factor contributing to auto loan debt is vehicle prices, because prices are more important than payments overall. In my opinion, of course, inventory shortages led to an uptick in vehicle pricing, resulting in car shoppers having to take out larger loans. After remaining relatively flat throughout the 2010s, new car prices increased sharply beginning in 2022. The new car consumer price index rose only 6.1%. That's it. From 2010 to 2020, that's crazy. That's all that rose in a decade. Then between 2020 and September 2023, they increased by 22%. That's what? Over 4 times the rate of normal? Much of this increase happened at the same time as interest rates began to climb, leaving car buyers paying higher interest rates on top of higher prices. And you guys can really see how prices go out of whack. And you guys see that this has barely gone up. You see that? So really stayed steady in 2011. I mean, it's just steady. And then here's the inflation right here. I mean, this is a huge asset bubble. Again, it's very, like, I understand, you guys, the need to get a vehicle, like if you have to work, if you have to provide for your family, but we don't need to be buying new cars for $80,000, right? If we need something, buy a used minivan. I mean, literally, my family drives a minivan and I love rocking that thing. The doors slide, straight back, so you don't have to worry about parking as much. But I really wish people would just get control in their spending habits, because it's just so important. A lot of people are blinded by the timeline of all of this. They're getting desensitized to what's happening in the economy. And a lot of people are just going to continue to keep their heads in the sand until a crisis comes knocking on their door. And in fact, a lot of people that own cars are starting to feel that crisis. Now, the lenders are starting to figure this out. One of their buddies just went out of business. So now lenders are making major changes to their auto financing program. Lenders have tightened restrictions on auto financing. Auto loans have gotten more expensive over the last several years due to rising new and used car prices. However, they have also gotten harder to come by. Some lenders have left completely the auto finance market. And that's going to happen, you guys. We're going to have more credit tightening as banks continue to suffer and the quantitative tightening continues to be felt throughout the economy. One of the most troubling developments this year is lenders drastically reducing their automotive finance options or leaving the market entirely. In September 2022, Capital One CEO announced that the bank would significantly reduce the auto loan portion of their business. So Capital One is in danger. Keep your eyes on Capital One. And I believe there was a massive round of layoffs. The announcement came after Capital One saw a 12% drop in earnings for the first quarter of 2022 to the second. And probably a big hit they took was from those non-performing subprime auto loans. The current situation spells trouble for both car buyers and dealers. As 2023 draws to a close, the auto finance industry is in a precarious position, but not yet in a state of emergency, not yet. However, if the trends that have developed in recent years continue, a true crisis could easily develop, which may have a grave impact on the auto industry and the economy at large. With no immediate relief in sight, borrowers must protect themselves. And one of the best ways to protect yourself is not to buy the most expensive or luxurious car. I mean, a car is something that is okay to settle with. Again, unless it's a work truck or something of that nature and you can claim the depreciation. Most people are not doing that though. So again, I'm really anxious to hear from you. Now, what I want to do as well is I want to show you guys how much potentially a car can remove from your purchasing power. Obviously, purchasing power is important. And as someone that's on the sideline waiting to purchase my primary residence, and as someone that had a volunteer repo back in 2009, you guys, I'm increasing my purchasing power by increasing my credit and having no consumer debt, saving as much money as possible by constantly rebudgeting. And I'm trying to make as much money as possible. I have multiple self-employed side hustles. It is scary. It is hard. But honestly, you guys, what we should be doing, in my opinion, right now is investing in ourselves, not a depreciating asset. Now, to put this in perspective, someone that makes $80,000 with a 20% down payment can get a loan for $277,000. But when we add right here, you guys, the payment, because remember, loans work by debt to income ratio, which means your monthly debt payment. So when I put a $725 car payment, let me show you guys what happens to your purchasing power. So it goes from 277,000, and let me calculate this, all the way down to 249,000. That's the difference, you guys, of over $28,000 of purchasing power. So understand, by buying these things, you're reducing your ability to borrow in the future. And if a recession hits, if unemployment hits, you guys, one of the things that we're going to be able to get a great deal on are cars. People, no one's going to want to touch cars. They're going to be so sick to their stomach paying that $1,000 car payment. They're going to be fire selling cars, or there's going to be a continued rush of repos and they will be bulk selling these cars at auctions. Now, again, you guys, as someone that had a repo, you don't want to play this game. I'm not a rich person. I can't afford to be making mistakes like this. So I'll wait on the sidelines. I'm going to wait for 0% APR and car prices to go down significantly before I buy one, if I buy one at all. I really enjoy having vehicles that are completely paid off, and I hope you do too. Now, other than that, guys, I hope you guys got some new value, insights, and perspective. And if you're out there investing in real estate, you know I wish you luck, and I hope you win.